Welcome to CrushTheStreets.com weekly market wrap-up. All right, you know the drill. Let's get started in the equity sector where the S&P 500 dominated headlines as it closed the session agonizingly near the 1600 mark. A scant 2.4 points off the key psychological threshold. The Dow Jones and the Nasdaq also made strong gains, up 0.89% and 1.26% respectively. This as the markets were boosted by positive jobless claims figures which suggested an improving labor market, one day before the highly anticipated monthly payroll report is due. The European Central Bank played its role of Kegmeister at the Fiat frat party by cutting interest rates for the first time in 10 months and opened the possibility of further action to catalyze the Eurozone economy. The U.S. Federal Reserve also issued a verbal commitment to keeping interest rates low by continuing its bond buying scheme in an effort to sustain growth. Isn't that nice to hear? Breaking down the S&P 500, there are two schools of thought. On the fundamental side, equity bulls highlight the allegedly improving labor market, the Federal Reserve's aggressive monetary policies, and the 19% lift in the index since last November's bottom as reasons to stay in the markets. Technically, the S&P has lost significant investor sentiment to break past the 1,597 resistance level, which is in stark contrast to the strong moves following the dip seen over the last 6 months. Further, the lack of enthusiasm is playing amidst the backdrop of weaker momentum indicators, a potential warning sign that any bearish news could induce volatility in the markets. Okay, enough from the equities. Let's move on to the winners and the losers of the week. For this week, we actually have two winners. First up is Apple, which moved 3.5% up above its declining 50-day moving average to close Thursday's session at $44. This was welcome news for Apple bulls, which in recent weeks have seen the venerable company being valued at $385 per share. Still, the question remains whether the latest move above the 50 DMA can be sustained, as a similar run on March 25th ended up in failure. For our next winner, chipmaker AMD shocked the investment community by moving up 26% in just this week alone. It was only a few days ago that CNBC pundits were mocking this company, but who's laughing now? As it turns out, Crush the Street was one of the first to highlight the potential of AMD. A few months ago, on February 8th, we mentioned that deflationary forces brought about enticing opportunities in growth stock plays, and AMD was our top pick. For the losers, NII Holdings, which is one of the world's leading providers of fully integrated communication services, took a massive hit on Thursday, giving up over 10% of valuation. Although the share price is above both the 50 and the 200 DMAs, the company itself has been in severe decline over the past 2 years and is struggling to maintain its foothold on an increasingly competitive space. Finally, let's take a look at precious metals, beginning with spot silver. The white metal managed to close near the $24 mark at 23.83 following Wednesday's substantial sell-off. Every analyst knows that in order for silver to gain its bullish posture, it really needs to be above the $26 line. But the immediate reality is that we are stuck in a consolidation range. However, the range itself is inclining, which gives hope that despite weak sentiment and volume, investor patience would be the key to profitability as the strong hands of the market make their way back in. As an alternative to silver, commodity bulls should consider palladium. Even though it does not have the marketability of gold or silver, palladium is guaranteed to be used at the forefront of technological advancements, as its unique element properties cannot be cheaply replicated. It was also the least affected precious metal during the April 15th commodity sell-off, as industrial demand continues to place a high premium on palladium, regardless of market value fluctuations. And that will do it for this edition. Before you go, subscribe to both Viral Network News and CrushTheStreet.com. I'm Hannah Bernard for VNN. Thanks for watching, and we'll see you next week.